We are going to go over Apple, ticker symbol AAPL. Year to date, Apple's up 42.46%. Of course, of 1 year, Apple's up 15.3%. We're going to go over a couple of news articles about Apple since their recent China issues that they got going on. Then after that, we'll take a look at their earnings report, then into the valuations to figure out a fair market price for Apple. And right after that, we'll look at the stock chart and see where the technicals are trading on Apple. So begin here, we have China is ordering government agencies to ban the use of their iPhones at work. All right, so investors, they're worried about the Chinese revenue. That's about 20% of their total revenue. That's their iPhone, Mac, all their total revenue with all their products. Right off the bat there, it makes me think that they're blowing that a bit out of proportion because they're just currently saying just we're banning iPhones at work, in the government. Um, like that's okay. It seems to me like you can just kind of brush. I don't know. I don't see that one as too big of a deal, at least for now. It could escalate, I'm sure. But the vast majority of Apple products are manufactured in China, and currently they're saying is it will take time to diversify outside of the country. It seems unlikely for these relationships to crumble in such a dramatic fashion, but the mere possibility of it may pose an overhang for the stock in the short term, right? So experts are saying that it'll take years, if not decades, for Apple to move its manufacturing and supply chain out of China, and such a move may impact profit margins, which seems very likely in my opinion. So the next article here is they're saying on the recent China news over the last few days, we believe in a worst case scenario, any Chinese government agency iPhone ban is way overblown and is to quantify it's less than 500K phones of roughly 45 million that are expect to be sold in China over the next 12 months. So a very nominal amount, right? Another thing to note as well is that they're increasing their price on the top two tier iPhones by $100. So I mean, even if you were to lose 500,000 phones, this price increase would probably, depending on how much profit margin there is, definitely in terms of revenue, it'll cover that and then some just on the price increase on the 45 million phones. So if you take 45 million that they expect to be sold and add $100 per phone to that, it gives you $4.5 billion. So obviously you'd take 500 away from that, so it'd probably give you 4 billion or not, the 4.45 billion dollars. You take, let's say the iPhone's 1200 bucks, right? 1200 times 500 is only $600 million. That decrease in phones there is gone immediately just by that $100 increase. And that's assuming each phone is increased. It's not going to be exactly like that because it's only the top two tier phones, but the bottom tiers are unchanged. But either way, even if half of those phones, you're still going to come out on top. So, I mean, it would probably take, 25% of those phones would probably equal the $500,000 or 500K phone in revenue loss. So, I mean, with this price increase, it'll cover that and then some if that's what it ends up being. Next up article is so Apple is already has been increasing their efforts in moving their manufacturing into India, Vietnam, and Malaysia, and I believe Ireland's another place too. They're looking to, yep, right here, Ireland, diversify their manufacturing in different countries, so that way not everything is just solely located in China. So they're in the midst of doing it. So they're working on it. I'm sure they're well aware of that, and I think they've been working on that for, I think since before COVID, or even in the midst of COVID, they realized that how at risk their business was, their manufacturing was once China got shut down. So we come over here to the income statement. We're over here at 9 months end. This is 2023. Over here is 2022. Total net sales down 3.7%. Our services was up 7%. Product sales was down 5.8%. Gross margin down was 43.6%. Obviously, you can see it's down about $4 billion there. R&D ticked up about $3 billion. Personally, I'm totally okay with seeing R&D up as long as SG&A stays relatively flat, and which it did. So total operating expense went up 7.4%, all basically because of the R&D. Our operating margin then is 38%. We would take out all of our taxes and everything, gives us a net income of net income of $74 billion. That's down 6.4% year over year, gives us a 32% profit margin. $4.67 earning per share. Diluted share count is 15.85 billion shares outstanding. There was a substantial decrease in share count by about 500 million shares. Net sales by region. Overall, the biggest decrease was in Japan. The next biggest decrease was in America. And you can see here the greater China area makes up $57 billion, which is about 19.7% of our total net sales. Down here, we can see our biggest decrease in categories. iPhone down 3.7%, MacBook a whopping 24%. So big hit to the Mac. Over the last 9 months here, $62 billion is sitting in cash. We take our cash plus our marketable securities equals $62 billion. Total cash increase was about 15 billion over the last 9 months. Accounts receivable decrease will show up as a net positive on cash flows around $9 billion. We can see accounts receivable went from 28 down to 19. Inventories ticked up, a good clip, really. Obviously, that's not something investors like to see, having a hard time selling their products. So I think investors are going to keep an eye on that next earnings release to see how they handled that. The vendors, these are not really loan supply to vendors, but these are vendors that have Apple's products, such as like a cellular store or like a Best Buy or something like that. So once they sell, then Apple gets paid back about $13 billion in the last 9 months. Inventories ticked up. So this kind of tells you that these companies like Best Buy and cellular stores are not holding on to as much inventory. They're trimming their inventories. At least that's what I make of this. Is that's why inventories ticked up. Apple wasn't able to sell as much because as much as they expected their vendors to buy from them or take from them, right? So and then vendors decrease their inventories, which is why this number has also decreased. Sorry. So overall down about $13 billion on total current assets. However, 9 billion of that's going to show up as a positive on cash flows. This will show up as a negative on this will also show up as a positive on cash flows of $13 billion. This decrease will show up as a positive on cash flows. Marketable securities. You can see we had a $16 billion decrease in marketable securities. We'll see a good chunk of that on the cash flows same as the 10 billion increase on marketable securities in the investing activities section. Relatively flat. The only decrease is because of that there. Everything else was, you had $10 billion on non-current assets. Accounts payable, paying down the suppliers. This will show up as a negative on the cash flows. They paid down about $18 billion. Deferred revenue, money that is paid, but services have not been yet delivered. Flat. Commercial paper down. What commercial paper it's unsecured debt for some reason. Usually this is used for payroll, paying vendors, or inventories of some sorts. Current liabilities sitting at 125 billion. Term debt 98 billion. They probably get a fantastic rate. Other non-current liabilities $52 billion for a total liabilities amount of $275 billion, down 28 billion year over year. Retained earnings went from negative 3 billion to positive 1.4 billion. Total shareholder equity went from 50 to $60 billion with a 17% increase. That's very nice to see. Down to the cash flow statement here, $74 billion of net income. We had share-based comp of 88.2 billion, and these were all changes within the assets and liabilities section. And then after that, it gives us a cash generated by operating activities of $89 billion in total. So we take our $89 billion, subtract out our CapEx, gives us a free cash flow of $80 billion or $106 billion annualized. Transfers in and out of marketable securities. They purchased 21 billion, sold 27 billion of marketable securities for about a $7 billion net gain. Payments for dividends paid out $11 billion last 9 months. Repurchases of common stock, this obviously offsets their SBC of $56 billion. Overall cash used in financing activities, majority of that was all in the stock-based comp, but they spent $85 billion for a total net increase of $4.9 billion. And we can see basically all of that flowed over to their retained earnings. They added 4.4 billion. So basically that was virtually all of that. So it added about 500 million to their cash and cash equivalents. And they also had cash paid for interest of $2.6 billion. If interest was only charged on their long-term debt of $98 billion, Apple's only being charged 3.5% annually. So I can see why they've got debt on the balance sheet, and that's assuming just $98 billion is all they're getting charged for, which obviously it's probably not true. So, little side note there. Coming over to the valuations, currently this is the company statistics. We have total valuation market cap of $2.8 billion or trillion dollar market cap, dividend yield of 0.54%, return on equity of 165%, return on invested capital of 39%. Gross margin 43%, operating margin 29%, profit margin 24.6%. Analysts have a price target on this company of $199 per share. They are forecasting 7% revenue growth, 6% earnings per share growth. So down here, we have a better understanding of where these numbers are averaged from. So this year, it looks like it's just going to be a flat year for Apple overall. Forward looking though, revenue growth, this is where it starts ticking back up a little bit into a more normal growth rate here for Apple of 6%, potentially 9%. But we've only got 4 analysts going that far out. So really 2024, 2025 are more balanced and gives us a better number. Peter Lynch valuation on Apple, return on invested capital, 58%. Gives us a Peter Lynch fair value of $39.41. After we add in dividend yield, it is $42.62. Apple's peers have an average multiple of 17.9%. Apple, you know what? Let's get rid of this one. That one's skewing everything. Apple's peers has an average multiple of 21.5, gives Apple price tag of $127.80 per share. Manual PE, market cap $2.8 trillion, cash equivalents 62, debt $275 billion, cash from operations $118 billion annualized, gives them a 25-year multiple. So it'd take about 25 years for Apple to earn its current market cap, which is just a tickle overvalued. Price to book, $335 billion in assets, $275 billion in debt. Outstanding shares, 15.8 billion, gives them a price to book ratio of 47, 5-year average of 30. So super overvalued. PEG ratio also incredibly overvalued. Graham's valuation here, I gave them a 2 because they're a more stable, mature company with lower growth rates. Gives them an intrinsic value of $115 per share. Weighted average cost of capital, 9.4%. Come over to here. Perpetual growth rate, 2%. Growth rate of free cash flow is 6.7%. We can see analysts had that as 6.7%. Our average growth rate is 17%. We can see our cash from operations just continuously grows year over year and growing very, very consistently. Same thing with capital expenditures, not growing actually. So it actually has decreased in the last 5-6 years there. So you increase your cash from operations by double, you decrease your capex by almost $2 billion. That's impressive. Free cash flow continuously, obviously growing and growing and growing. So it gives us a free cash flow forward looking terminal value of $2.4 trillion. Cash and marketable securities of $62 billion. Gives us a DCF price per share of $107. Earnings per share 5.95. Current PE 29.94. Lowest growth rate was 6%. So we put 6 in over here. 6 goes into 72, 12 times. 12 goes into 10 years, 0.83 times. So we're going to double our multiple 0.83 times. So not quite one full double. So I would put in 11 for future earnings per share. Gives us a fair value of $33 per share, a purchase price of $23 per share for a 30% margin of safety. Summary on Apple, we're getting an average price of $85 per share, 30% margin of safety of $60 per share. It's no surprise Apple is very richly valued. It's trading at a 29 times earnings, 30 times earnings, basically. Everybody is very well aware of how overpriced Apple is, but Apple is Apple, and Apple doesn't trade based on its valuation. It trades based on what it is, the name, and all that. So if we were to look at this from a valuation standpoint, we'll never be able to buy Apple if we just look at the price tag of what it's currently valued at today. Probably Apple is mostly just going to be traded off technicals, at least for the foreseeable future, until maybe one day Apple actually does trade at its current valuation, if the valuation actually, like its financials catch up to its valuation, or it pulls back in price to its fair market value. Fantastic financials, flawless balance sheet, really. Return on invested capital, return on equity, well above 15% target that we like to see. 30%, 32% profit margin of $230 billion. That's incredible. Increase their iPhone pricing on the top two models. That will help out with their future revenues. Their headset is to launch early next year. I think there's a lot of questions behind what that will do in terms of revs, but Apple customers are really loyal to Apple, and even though I think they're selling it for like 3,500 bucks, they're gonna sell. What it's gonna do to their revenues, we'll wait and see, but it'll increase it somewhat for sure. The bad thing on Apple is the geopolitical risk, the China telling to ban the iPhone at work with the government. To me, seems pretty minimal. Like, you're not really going to affect hardly anything to the revenue side of things. They're currently working on moving manufacturing, which could put downward pressure on profit margins. We'll wait and see on that. If anything, Apple might just increase their price even more. People are paying it now. What's another $100? Very richly valued, but for good reason. Very stable, consistent company. Again, I think Apple's just going to trade based on technicals. It's not going to trade on what it's actually worth. Nice, clean, steady uptrend. We're within this channel here. Currently, we're sitting on a support range. If Apple breaks through 175 range here, I think, there's Apple's coming back down to like the 160 to 156 range. If it does, I think you're going to have two areas of support. You're going to have this longer term trend line plus another potential support range. I think that'll be a fantastic buying opportunity on Apple. And again, I think Apple is just going to be trading on technicals. And I mean, we can see we go back to 2020. This is where Apple is trading at a fair market value today, right? We just saw that we got a fair market value of about 80, what was it? $85 per share, 30% margin of safety. Basically, on Apple, you're not going to get a 30% margin of safety unless the market, the overall economy takes a poop. So we can see basically it seems as though Apple's trading at 4 years ahead of where it's currently at. If we base it off of that, that's kind of what it seems like. Apple's not trading at what it's worth today. It's trading at what it's worth 4 years from now. So something that, numbers you could run is to just, figure out, okay, what's Apple going to be worth in about 4 years? And then that's what probably the fair market value is on Apple, honestly, versus what it is today, because Apple is so stable and consistent. So maybe that China risk will get us down to like the 156, 160 range. I think that'll be a pretty decent buying opportunity based on technical patterns here. And it's possible. Otherwise, it just sits out here and then maybe resumes higher. I can't really imagine Apple going too much above 200 until all that headset comes out and the new iPhone revenues start coming in. I think right now we're just going to be sitting down in this range until that stuff comes out. And then maybe after that, after we see the revenues on that, I think Apple will decide where it's actually kind of worth. Because I'm guessing that they're pricing in this virtual headset already, the revenues on it. People are predicting what revenues are going to do for Apple. And I think that's why Apple's trading at such a premium today, is because they're pricing all this in ahead of time. Obviously, I'm confident in that. But so if those numbers come in lighter than what they expect, I could probably see Apple coming down. But if those numbers come in better than they expect, then Apple's probably going even higher than where it is now for sure. So But that's my take on Apple. If you found value in this video, drop a like, subscribe. Also, if there's a stock that you guys are interested in wanting valued, drop that in the comments as well. But that'll do it for this video, and we'll be back later with another stock analysis video.